Happy Friday. Welcome back to today's Daily Dose of Market Insights. Very good morning. I'm Kelvin here. Today will be Friday, the 17th of October 2025. So as usual, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, let's have a quick recap what has taken shape yesterday and as well as in early Asia today's early Asia session. Pardon me about tongue twisting. In terms of the respective broad-based cross-asset classes intraday movement in respect and in relation to the relevant news flow / economic data releases before we jump straight into the intraday technical outlook. So let's have a quick recap what has taken shape yesterday, especially in a very interesting movement on the US benchmark stock indices. All right, so yesterday we considered as a down day for all the major US stock indices, but there's actually a silver lining before the market actually sold off in the second half of the US session, but we could see over here. So the silver lining come from a earnings upgrade from a major semiconductor player within the global semiconductor chain, which was TSMC over here. So we know that TSMC is considered as the global most advanced semiconductor chip manufacturer. So yesterday they actually released their Q3 earnings results. So upon releasing their Q3 earnings result that beat expectation over here, they also give a very rosy year-end revenue projection for revenue growth. So they achieve a hike its projection for 2025 revenue growth for the second time this year. Now foresees mid 30% growth in annual sales over here. So and as well as it also rise the lower end of its capital spending target for the year to be at least 40 billion for capacity expansion and upgrades in 2025, with much of that going towards building capacity. So net overall, that actually maintain the ongoing optimism in this AI high productivity team play that has been the main front of triggering a positive feedback loop into the major US stock indices since 2 years ago, and also has been reinforced since the start of this year. So if you look at the heat map of the S&P 500 yesterday, the semiconductor industry within the information technology sector managed to help the fort in a sea of red across the S&P 500. So this is S&P 500 heat map. So Nvidia managed to go against the bearish trend yesterday, up by 1.10%. Broadcom up by 0.8% over here. So net overall, we see a outperformance of the US semiconductor stocks in general against the benchmark US stock indices yesterday, where all of them closed in the red due to this fear of a US banking regional crisis that may resurface. All right, over here. Why? Because yesterday there was this so-called two small regional banks over here, Zion Bank Corporation and Western Alliance Bancorp, that actually fall more than 13%, and also this Western Alliance Bancorp fell more than 10%. All right, so this particular banks, small regional banks, as well as investment bank Jeffries, created a negative feedback loop into the US stock market yesterday over fears of a bad loans that these three corporations may have on their books, tie up to this very opaque private credit over here. So recently, the bankruptcy of two auto industry related companies this year has raised the concern about loose lending practices, especially in the opaque private credit market, that these three financial institutions has a significant we call it share in their respective balance sheet. So hereby causing a negative feedback loop into the US stock market, which also causes the indiscriminating selling in other big major financial institutions as well, where JP Morgan, Wells Fargo, Citigroup, Bank of America, and we have this even Goldman Sachs as well over here, GS Goldman Sachs, right, down by 2% to negative 1.2%, the range, and some of them Citigroup is down by negative 3%, despite the fact that their balance sheet are much more healthier compared to these two regional banks balance sheet like Zion Bank Corporation and Western Alliances. So there's a bit of a indiscriminating negative feedback loop that is being triggered on the major financial institution that actually give a rosy revenue guidance as well, given the fact that 2 days ago they just reported their Q3 earnings results. All right, so hereby that actually causes a sea of red in the four major US stock indices. The S&P 500 down negative 0.6%, the Nasdaq down negative 0.4%, managed to outperform because of the positive close by US semiconductor stocks, and also Nvidia managed to close in the green by up by slightly more than 1% yesterday. The Dow Jones down by negative 0.6%. And in terms of any credit related stress, the highly levered rather the relatively higher gearing Russell 2000 component stocks underperformed yesterday with down by negative 2.09%. And also what's interesting over here is that the dollar continues to remain weak over here. So the dollar, this is a 5-day rolling performance of the US dollar against other major currency as of 17th of October 2025 as we're speaking right now. So based on a 5-day rolling performance, the dollar is the weakest against the yen and against the Swiss franc, both of them down negative 1.28%, the dollar against the yen, and the dollar Swiss franc is down by negative 1.52%. And what's interesting over here is that the dollar managed to help firm against the risk of proxy currency, which is the Aussie dollar, managed to close up 0.49% as we are speaking right now. So this is a 5-day rolling performance. So if you look at the 1-day rolling performance, taking into account the last 24 hours, over here we see some the dollar is firm against the Aussie dollar, which is up by 0.27%. This is the 1-day rolling performance. Okay, so the reason this dollar is so strong against the Aussie, because the Aussie is considered as a risk of proxy currency. So anytime when we start to see a systematic risk unfolding in the global financial system, so yesterday was a systematic risk in the US regional banks that causes a sell-off in the major US financial institution stocks. Those that have healthier balance sheet also sold off as well. So that created a negative feedback loop into the Aussie dollar that tends to be a risk of proxy currency. So that actually explains the dollar strength or the dollar firmness against the Aussie dollar right now, whereas the dollar is weak against other major currency. So if you look at the dollar index, which I explained to you guys earlier from a technical perspective, so what you could see is that the dollar index over here, I tend to use the dollar index as a gauge of general dollar strength or general dollar weakness. So the US dollar index, since the low of early July this year, 1st of July, it has been trapped in this kind of symmetrical triangle range configuration. As couple of days, it tends to challenge this major long-term circular support at 97.3 over here. So what you could see is that on last Tuesday, it failed to break above this upper limit of this symmetrical triangle range configuration. Also, despite the fact that we have this ongoing trade tension fiasco that has been resurfacing again between US and China after US President Trump 100% additional tariff trade that was unleashed on last Friday. So that thereafter, the price action of the US dollar index has this bearish reaction right off the upper boundary of this symmetrical triangle on last Thursday and Friday, and have 4 consecutive sessions of down lower low closes. All right, 1, 2, 3, 4. So now it's heading to the 4th consecutive session, and now attempting to actually challenge this intermediate support level at 98.05. You can use my screen over here, 98.05, which is the 50-day moving average. So if we start to see a breakdown below 98.05, potentially it could retest the all important long-term secular support level at 97.3. And if we go below it on a daily basis, it could test the lower limit of this ongoing symmetrical triangle range configuration support level, okay, at 96.55. All right, so net overall on the intraday basis, the honors is being skewed towards more of a dollar weakness rather than the dollar strength. And later I'll share with you the Aussie dollar. So Aussie dollar, yes, despite that is a risk of is a risk of proxy over here. I do not think the Aussie weakness could be sustainable, given that in the broader picture, the dollar strength is not resurfacing at this point in time based on the US dollar index movement over here. All right. So overall, to see a much more pronounced US dollar weakness, number two things got to happen. We need to have a weekly close below 97.3 and also a bearish breakdown below the lower limit of this symmetrical triangle range configuration that has been in place on the dollar index since the start of July this year. Right, and one of the reasons why the dollar index remains weak, or telling us that in a general environment, the dollar is more weak than strong because of rising Fed rate cuts bets. All right, so market participants in the Fed funds futures market continues to price in high odds that the Fed will continue its interest rate cut cycle into 2026. So by looking at the CME Fed Watch tool, that actually take into account the latest data on the price action of the Fed funds futures market, market participants in the Fed funds futures market is still assigning high odds of 96.8% or average round up 97% that the Fed will engineer another rate cut on the 29th October 2025 FOMC meeting to bring the Fed funds rate down lower from the current rate of 4% to 4.5% to 4.25% to a lower level to 3.75% to 4%. And very interesting right now, there is a small chance of 3.2% that the market is betting for a 50 basis point cut to bring it down lower to 3.5% to 3.75% over here. And if you look at the aggregated tab, where we are able to see the probability stretching out into 2026, so market participants is also looking at a high chance of 80.8% or 81% that the Fed will do another 25 basis point cut to bring it down lower to 3.5% to 3.75%. And what's interesting over here is that the odds has starts to risen. Previously, it was about only less than 1%. Now we have 19% chance that market participants may see a 50 basis point cut coming into the 10th of December 2025 FOMC meeting to bring it down to 3.25% to 3.5%. And overall, we continue to see high odds of more than 60% or more than 70% that there could be potentially 3 interest rate cut in 2026. The first one coming in on the 28th of January 2026 FOMC meeting, 81% chance to bring it down to 3.25% to 3.5%, and another 25 basis point cut on the 29th of April 2026 meeting at 71% chance to bring it down to 3% to 3.25%. Then thereafter, we have a 96% chance on the 16th of September 2026 meeting to bring it down to another 25 basis point cut to bring it down to 2.75% to 3%. So net overall, the Fed funds futures market traders is expecting by the time towards the end of 2026 over here, by the time it hit 9th of December 2026, 74% chance, which is a high chance that the Fed funds rate will end at 2.75% to 3%. So that indicating a start of a new interest rate cut cycle that has kickstarted in September this year. So because of these higher rate cuts bets that's being priced by the Fed funds futures traders, as being compiled by the CME Fed Watch tool as shown on your screen right now, overall, we are now the Fed funds futures traders is expecting a much more dovish Fed, hereby creating a negative feedback loop into the US dollar index, looking for further dollar weakness, at least in the short term basis over here. All right, and with this weakening of this US dollar, and yesterday there's this fear about this systematic risk coming out from the US regional banks, that also causes gold price to soar as well to fresh all-time high over here. Let me share with the gold price on a daily basis. All right, so gold price continues to rose, hit our resistance level, which I highlighted yesterday, 4,310, 4,320, and continues to be in a overbought territory. So yesterday, gold price rose by positive 2.8%, riding on two catalysts: weaker US dollar due to a weaker US dollar, due to a much more a cemented, higher dovish Fed going forward into 2026. Debasement trade narrative, that means aggressive fiscal expansion by the US government that could potentially lead to we call it a lack of distrust of fiat currency, which i.e. also the US dollar, or weaker US dollar. And now the third catalyst was yesterday, the potential systematic increase in systematic risk in the US regional bank, arising from that fall off of that two US regional bank that has bad loans pertaining to the opaque private credit market over here. And in today's Asia session, gold going to add 0.8%. So yesterday, I do highlight gold as one of my chart of the day, remain my bullish bias. So later I'll share with you what is my latest outlook for gold in a couple of seconds time. All right. And in today's Asia session over here, we also start to see a slew of negative feedback loop coming into the regional stock market as well, due to that fallout from that rising that uptick in systematic risk in the US regional banks, where Nikkei is down by negative 0.9%. We see the Hang Seng also down by negative 1.34%, and as well as the rest of the other Asian markets also in the red. The CSI 300 is down by 1%, which is the benchmark of the Hong Kong China A shares market. And you go down to Southeast Asia, Singapore is down by a fair bit, by negative 0.5%, and the rest of the Asia region is red as well. Australia down by negative 0.7%, and that one that is managed to close slightly in the green is KOSPI 200, which is up by 0.28% over here. All right, so with that, let me before that over here, oil prices going to fall as well. So oil prices yesterday dipped down. Let me share you the chart of oil price. Okay, where is the oil price? So oil price right now is on site to have a third consecutive weekly loss. All right, over here, which is within our expectation as well. We have been have a bearish bias of oil price for the entire week. So this is a weekly oil chart of oil. So oil continues to see three bearish candlestick. So on site for the third weekly loss over here. So yesterday oil price was down again by negative 2.34%. So the fall off from oil price was, number one, global supply glut continues because of this ongoing OPEC plus that continues to be much more, we call it skewed towards having production hikes rather than production cuts. And also yesterday news flow coming out that Trump has a call with Putin, and potentially they will meet up again with Putin to have another so-called peace summit between him and Putin, a second summit to discuss the situation in Ukraine. So market participants view this as a negative for oil price. So if things turns out well this time around, hopefully the Ukraine issues could be solved, and that could allow lesser sanction globally on Russia oil and slash energy products. So i.e. there could be more oil flowing back into the global oil market if Russia sanction could be lifted out, if the outcome between US President Trump and Russia President Putin meet for the second time face to face, and they are able to strike out a positive outcome pertaining to the ongoing war between Russia and Ukraine, to put a halt to it. All right, so that's for the first segment of the daily dose. So let me move on to the second segment of the daily dose, which is the intraday technical outlook on all the broad-based cross asset classes. So let me expand my screen. All right, so let me start with the FX market first over here. So going to the FX market, still recall that yesterday the euro dollar was my chart of the day. So I explained to you why euro dollar was my chart of the day, because of the positive technical element, both on the daily chart and on the hourly chart, because of this double bottom bullish breakout right above the 1.1530 medium term pivotal support level that we highlighted. So this bullish breakout continues to accelerate towards the upside. This minor double bottom bullish breakout hitting our first resistance level at 116.90 yesterday, now turns into an intermediate pullback support level, which is also the 20-day moving average. So right now, the price action of the euro dollar has surpassed the 50-day and the 20-day moving average, giving much credence to our bullish buyer stance to remain intact. So hereby, we will have a still maintain our bullish buyer stance for the euro dollar for today, as its ongoing recovery continues, using a tightened pivotal support for today at 116.45/116.25, which is the neckline support, which is the former neckline resistance of this minor bullish bottoming formation, now turns into a critical key short-term pivotal pullback support area. All right, over here. So as long as any minor pullback didn't surpass below 116.45, 116.25 short-term pivotal support level, which I adjusted it higher for today, maintain that bullish slash recovery bias scenario for euro dollar. Next resistance level to watch on the intraday basis will be 116.70, which is the 2.618 Fibo extension that remains unchanged, which is the minor swing high area of 30th of September and 2nd of October. A breakout above 117.60 will see a further acceleration towards the next intermediate resistance level at 118.20, which is the minor swing high of 23rd of September and 24th of September, and so confluence very closely with the 3.618 Fibo extension from that double bottom low, which is at 118.45. All right, only a bearish breakdown below 116.25 that would invalidate today's bullish bias on the euro dollar to see a choppy decline to retest 115.90 next. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar also continues to rise as well. Haven't surpassed the 50-day moving average, but already surpassed the 20-day moving average. Now trying to challenge our resistance level that we highlighted yesterday at 134.40, 134.65 for now. So intermediate support level to watch out for will be this minor swing high area here. Now turns into a pullback support at 133.95. So only a bullish breakout above 134.65, then I will tighten my pivotal support to 133.95 for today. So for now, pivotal support level will be at 133.60. So maintain my bullish bias for the sterling dollar, heading up towards the next resistance zone at 135.10, 135.33. Over here, that's for the sterling dollar. Only a bearish breakdown below 133.60 will invalidate this bullish bias on the sterling dollar to retest the next intermediate support level, which is the minor swing low area of 10th of October and 14th of October area at 132.65 again. Right, so that's for the sterling dollar. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar first. Let me go to the Aussie dollar, starting with Aussie dollar. So like I explained, yes, even though Aussie dollar managed to fall, right now it managed to be so-called held right exactly at this pivotal support zone that was our level on Wednesday. All right, so we continue to see the RSI remains being supported by this rising ascending trend line support. Hereby, I'll be still using the 64.65, 64.40 as my short-term pivotal support zone to maintain my bullish bias, but I will have a upside trigger level. So upside trigger level will be this level over here, which is today's Asia session high at around 64.90 area. So a breakout above this 64.90 upside trigger level may potentially see a further push up to revisit 65.30 for today. All right, so still maintain that bullish bias for this potential ongoing bullish recovery in line with the broad-based dollar weakness over here. So despite the fact that why Aussie dollar is weak because of that uptick in the systematic risk in the US regional banking industry, which I share with you guys in the first segment of the daily dose. So upside trigger level 64.90, breakout above it increase the odds of this intraday minor recovery scenario towards 65.30. Only a bearish breakdown below 64.65/64.40. That will see another extension of this week of this Aussie dollar weakness to test the key medium-term pivotal support area at 64.15/64 figure level, which confluence with the 200-day moving average, and as well as this expanding this medium-term expanding wedge range support that has been running since the low of 23rd of April 2025. All right, so that's for the Aussie dollar. Next up will be the dollar yen over here. So dollar yen, still recall that we do have a bearish bias over here. So the bearish bias has really hit our support level at 150.50 over here. So right now, potentially it could cover the gap up that was formed on Friday over here. All right, so now this will be my intermediate resistance level to watch, 150.50 now. Let me delete it over here. So I would tighten my short-term pivotal support, tighten my short-term pivotal resistance on the dollar yen to 151.70, 151.70, which is also the minor descending trend line that has kept this week prior bounces since the high of last Friday, 10th of October over here. All right, so now this gap up was being formed on the previous Friday, which is on 3rd of October, during the results of that newly elected LDP leader over here. So potentially it could actually cover this gap support area. So any bounces, we will fade the bounce using a tightened short-term pivotal resistance at 151.70 over here, which is also the minor swing high area of 15th of October that got rejected after breaking below 14th of October. All right, this much. So a breakdown below 149.80 will see a further deceleration of the dollar yen towards the gap support area at 148.80/148.55. We also confluence with the rising 50-day moving average. Only a bullish breakout above 151.70 will invalidate today's bearish bias view on the dollar yen to see a rebound back again to retest 152.45. Only a breakout above 152.45 will see a more pronounced squeeze up towards 153.65/153.90 next over here. So that's for the dollar yen. Further, we call it maintaining that bearish bias for deceleration move downwards if we start to see a breakdown below 149.80. So that's for the dollar yen. Now moving on, next will be the major stock indices, starting with the Asia Pacific stock indices, which is the Hong Kong 33. So the Hong Kong 33, after unable to break our first resistance level, now is coming back down towards our pivotal support area again. All right, over here. So given the fact that now that is Friday, so that could be a range bound scenario over here. So given this range bound scenario, potentially I'll flip to a neutrality stance right now, given that it's coming to a Friday situation. Okay, so I'll just flip to a neutrality stance. Okay, so this will be neutral. Okay, so neutral between 25,140, which is still our pivotal support, and the upper limit, that's our first resistance that we have on Monday, that is broke above it, has already met the resistance level, and it can't break throughout this entire week. So I'll flip to a neutrality stance for the Hong Kong 33, that is representing the Hang Seng Index. So neutral between our pivotal support at 25,140, upper limit will be at 25,860, 26,060, that that stubborn resistance that has been met but can't break above it throughout this entire week so far. So that's for the Hong Kong 33. Next up will be the Japan 225 over here. So Japan 225 managed to hit a higher high yesterday, all right, and before trading downwards in today's Asia session, moving in line with the movement of the US Wall Street index as well, due to that negative feedback loop coming out from that regional banking fiasco over here. But the fall so far has been pretty much minute. So the pullback has been in a kind of a very small little body candlestick formation over here. So with that, I would actually still maintain that bullish bias in any form of my minor pullback. So first minor pullback support level to watch will be still the same at 47,270, using the 46,540 as my pivotal support level, given that we're also approaching the weekend as well. So this will confluence with the rising 20-day moving average as well. So as long as any minor pullback didn't surpass below 46,540, we will still maintain that bullish bias on the Japan 225 that's representing the Nikkei 225. First resistance level to watch for today will be 48,195. That was also very close to today's Asia session high so far at 48,148 over here. So 48,195. First resistance level to watch. A breakout above it, potentially seek out the current all-time high area at 48,860, 49,070. Only a bearish breakdown below 46,540 will negate this bullish bias, or will invalidate this bullish bias to see a deeper minor corrective pullback towards the gap support area at 45,855. Right, so that's for the Japan 225 representing a Nikkei 225. Onward next will be the Germany 30 represent the German index. So during today's Asia session, it broke below our pivotal support level, which we have at around the 24,140, 24,040 level. All right, and now fast approaching the medium-term pivotal support, which was the former minor swing high area of 10th of September and 5th of September, where it did that bullish breakout and starts to see the prior impulsive up move to seek out a fresh all-time high at 24,780 on the 9th of October. So given this choppy configuration that is forming on the Germany 30, so yes, it didn't break below the pivotal support area, but however, given this kind of choppy price action movement that has been prevailing for the entire week on the Germany 30, my bullish conviction has been reduced based on the latest price action. So I'll flip to a neutrality stance between yesterday's, we call it minor swing low that has been taken down during the US session, and also confluence with that 20-day moving average as well that has also been trading, that has also been taken down on the downside yesterday. That means it has a close below it after the end of the US session at 24,140. So this will be the upper limit of my neutrality zone. Lower limit of my neutrality zone will be the pivotal support level at 23,900. Only a bullish breakout and an hourly close back above 24,140, then that I will be more confident to flip back my stance to a bullish bias to seek out a the next resistance level to watch out for. For today will be at 24,100 on the intraday basis over here. That's 24,100. Put it in writing. Okay, and above 24,100, potentially seek out 24,480 next over here. So if you do the Fibo retracement, okay, to the current intraday low, 24,480 confluence with the golden ratio of 61.8%, hereby making it an important inflection level to watch at 24,480. Right, so that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 also, as mentioned, can't maintain that bullish momentum above the 20-day moving average, broke down, and now fast it actually managed to actually come close with our pivotal support level, which is the rising 50-day moving average at 45,710. That is our adjusted pivotal support that we have for yesterday. So still maintain that so-called bullish bias at 45,710 over here. But however, price action on the US Wall Street 30 got to have a breakout for today at this level here. Which is 46,310, all right, which is also the 20-day moving average over here. So by breaking above 46,310, so this is something like an upside trigger level for the US Wall Street 30, breaking above 46,310. So let me put it in writing. Okay, so breaking up above 46,310 potentially could seek up the next resistance level on the intraday basis 46,680. Okay, over here, 46,680. However, if price action break down below 45,710, then this bullish buyer's view will be invalidated. So this is a top of the range. So it's the bottom of the range. Then now we are talking about going back to the top of the range at 46,680 that has been formed since the start of this week. Right, so it's like a range over here, but this range has started to see a higher lower. This low, so far this low is higher than this low, and this low higher than this low over here. So it's more like a bullish consolidation instead. All right. So, however, but if you start to see a breakdown below 45,710, for sure that will start to see a lower low, and potentially this negative price action on the US Wall Street 30 could extend further towards the downside to revisit last Friday all important critical swing low at 45,190. So that's for the US Wall Street 30. Next up will be the SPX 500 over here. So the SPX 500 also has been bought down in this range over here. So far this range, the top of the range is at 6,710 over here at this point in time. So right now, yesterday we do have a pivotal support. So no change of the pivotal support, which is the rising 50-day moving average. And also we start to see a higher low that's being formed over here. So this is considered as a bullish consolidation as well within this kind of range formation. So still using the 6,570 as my short-term pivotal support level. So we have an upside trigger level, all right, over here, okay, which is this pin bar low, all right, this pin bar over here, but it's the body of the pin bar, and also very close to the 20-day moving average at 6,670, right? So this is something like my upside trigger level to negate this ongoing intraday weakness that's being impacted on the US indices over here. 6,670, yes, 6,670. All right, so 6,670 will be my upside trigger level. A breakout above it potentially seek out a retest of this bullish range configuration upper limit at 6,730. That is our highest level that's being formed so far this week, which is the swing high on Wednesday. All right, only a bearish breakdown below 6,570 will invalidate today's intraday bullish / recovery scenario towards the upper limit of the range to seek out a deeper corrective decline to retest the medium-term pivotal support level, which is also our last Friday critical swing low area at 6,506, 6,500. So that's for the SPX 500. Lastly will be the Nasdaq 100. So the Nasdaq 100 at the start of the at the start of US session, it rallied and hit our resistance as expected, 25,030, due to the positive spillover impact from the US semiconductor stock Nvidia riding on the coattails of the TSMC rosy revenue outlook for 2025. So it came down, hit our first resistance level, hit our first support level, at 24,565, stopped at the level and start to trade sideways over here. So no change. Our pivotal support still remains the same at 24,290, which is the gap up support that got supported on Tuesday that did that minor bullish reversal. So what I could see is that we also see a series of higher low after from the last Friday critical low at 24,000 level over here. So with that, still maintain that bullish recovery towards the upper limit of this bullish consolidation range configuration at 25,030. So, but however, we do have an upside trigger level for today, which is this 20-day moving average over here at 24,730. Okay, which is I think our as a intermediate near-term resistance level, 24,730. Right, I put it in writing. So 24,730 will be my intermediate resistance level, something like an upside trigger level to increase the probability for it to float back up towards the upper limit of this bullish bullish consolidation range configuration at 25,030. Right, 25,030 over here. However, a bearish breakdown below 24,290 will invalidate the bullish bias signal for today to see a deeper slide to retest last Friday critical swing low 24,000 the medium-term pivotal support at 23,870. So that's for the Nasdaq 100, and also sum up all the intraday outlook on the major stock indices. Let us move to the commodities market, starting with the red hot gold. So the red hot gold hit our resistance level 43.11, 4,330.10 over here. Okay, it hit this resistance level. All right. So with that, it continues to be in an acceleration phase. Hourly RSI continues to shape a series of higher low, managed to hold above this parallel ascending trend line drawn from the previous oversold level on last Friday. So far, no bearish divergence has been formed on the hourly RSI. Hourly RSI going to shape a series of higher high over here in line with the price action on the raw price action of gold XAU/USD. So with that, I would tighten my pivotal support level to 4,240 over here, which is very close to today's Asia session intraday low that has been seen at 4,278. So as long as this price action didn't break below 4,240, tighten short-term pivotal support on gold XAU/USD, we will continue to maintain today's intraday bullish bias view, potentially seeking out the next intermediate resistance zone based on the FIBO extension cluster level at 4,424, 4,463. Above 4,463 will seek out the key major resistance level at 4,520, 4,560. So why this level is important? 4,560. So 4,560, if you look at my daily, my weekly chart over here, oops, go to the weekly chart. Okay, sorry, not here. This chart, my weekly chart. Right, so 4,560 is the 0.764 FIBO extension from this ongoing 5-wave up since the low of September 2022. So that's the weekly chart. So this 4,560 is a very important major resistance level, and we see how the price action reacts from that. All right, so for now, on the intraday basis, still maintain that bullish bias stance with a tightened short-term pivotal support at 4,240. Only a breakdown below 4,240 will invalidate this bullish acceleration movement on gold XAU/USD to trigger a minor corrective decline sequence, exposing the next two support level to watch, 4,180 followed by 4,107 next. So that's for gold XAU/USD. Lastly will be the West Texas crude oil over here. So let me go to the West Texas crude oil. All right, so the West Texas crude oil now is fast approaching our support level at 56.80 over here, 56.80 over here. So broken below our first support at 58 figure level. All right, so this 58 figure level will be my pullback support, pullback resistance level to watch. So I will still maintain that bullish bias. All right, a bearish bias over here. So still maintain that bearish bias on the West Texas oil for today. Not bullish bias, my apologies. Still maintain that bearish bias on the West Texas oil. So for now, I will have a tightened pivotal resistance level, taking into account of yesterday's high at 59.15. Okay, over here. Let me adjust everything. 59.15. Okay, so this will be a normal, no longer my pivotal resistance. Okay, so I'll tighten it to 59.15 over here, 59.15 for West Texas oil. Maintain that bearish bias on West Texas oil. First support level to watch, which is fast approaching at 56.80. So if this support level breaks, potentially we see a further deceleration on the West Texas oil towards 55.50 level. If we do another FIBO cluster, it should be made as well. Okay, it's very close to the one time at 1.236. Right, let me put it down. And if we go back to graphically, okay, it's the 5th of May minor swing low. Okay, 55.81. Okay, so very close. So this is a level which is being defined by various technical elements or definition, graphical and Fibo extension cluster levels. All right, so we do it as 55, 80 slash 50, 50, 55. All right, over here. Okay, and graphically, we also could see a deceleration channel at this point in time. Okay, that is forming. Okay, so to tally up everything, maintain that bearish bias on this West Texas oil as it's fast approaching our near-term support level that we have on Wednesday at 56.80, but no signs of a exhaustion yet. Hereby, to have a better risk management perspective, I would tighten my pivotal resistance level to 59.15, maintain that bearish bias. A breakdown below 56.80 exposes the next near-term support level in the first step at 55.80 slash 55.55. Only a bullish breakout above 59.15 will invalidate today's bearish bias view to see a mean reversion rebound unfolding back into West Texas oil again, exposing the next intermediate resistance to watch will be at 60.55. All right, so that sum up all the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today will be the Friday over here. So Friday, during the Europeans, during the start of the before the start of the London session at 2:35 p.m., we have a BOJ official speaking. Bank, BOJ official, Uchida speaking. So that could potentially influence the dollar yen rate, given the dollar yen has broken below several key short-term support level, and the dollar yen and as well as the yen crosses. That will be at 2:35 p.m. Singapore time. And this core inflation rate, which is a finalized rate at 5 p.m. Eurozone, this shouldn't change much because the preliminary figure will be more or less the same, unless we have a big deviation from the preliminary figure, something to take a look out for, because the preliminary figure that was released around 2 weeks ago was at 2.3%, but still something to look out for. At 5 p.m. Singapore time, the core inflation rate, the finalized rate for the month of September for Eurozone, will be released at 5 p.m. Singapore time today. That could potentially influence the euro dollar and the euro crosses over here. And after that, we have a Bank of England official speaking at 5:35 p.m. Bank of England Phil speaking, and 7 p.m. we have an ECB official speaking, ECB Dontry. So likely they'll be speaking on the sideline of this ongoing IMF World Bank summit in US/New York. All right. Then after that will be the start of the US session will be very, very quiet. So no key data released today, given the fact that the US is still in a US government shutdown. So no official release of any data that is being compiled by the statistical agency of the US. Then thereafter, we have another Federal Reserve official speaking, Fed Musalam at 12:15 a.m. Then 12:30 a.m. Bank of England, Breeden will be speaking over here. So that sum up the we call it, yeah. Then important over here is that on Monday, before the start of our daily dose, we have a slew of important China data coming out. Interest rate decision, loan prime rate, 1 year and 5 year for the China financial market will be out at 9:15 a.m. the decision. So market participants is expecting no change on the loan prime rate, but important to look at will be the housing price index. Quarterly Q3 growth rate for China, industrial production and retail sales. All of them will be out at 9:30 a.m. and 10 a.m. before the start of our daily dose on Monday at 20th of October. And in fact, that I almost forgot. On Monday, there will be no daily dose because Monday is a public holiday in Singapore. So our daily dose will resume again on next Tuesday, which is 21st of October. But bear in mind that this is the key data right on Monday, early Asia session, after the start of the Asia session, which is the China House Price Index, the GDP growth rate, the industrial production, and the retail sales that could influence the Hong Kong 33 CFD index prices. So with that, I'm Kelvin here. I wish you all a great and restful long weekend. and we shall speak again on next Tuesday, 21st of October. Thank you.